Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Hope you're all having a great week. We certainly aren't lacking for action, even though we are lacking for news, like headlines. Not a lot of scheduled news, not a lot of earnings this week or next week for that matter, but we are flying around. Things are really trading in wide ranges, so still a lot going on. Uh, now, uh, when we have movement like we're seeing the last few days, and actually this is kind of something that applies most of the time too, um, you will see quite a bit of action in out of the money options, right? Because I mean, normally stocks maybe trade in like a 1% range or what have you, right? But over the last week, we've been trading in like 4, 5, 6, 7% ranges. We're seeing some really crazy moves. So further out of the money options are getting a lot of attention. Now, I trade out of the money options pretty frequently. It's not just like a one off. And one of the main things I stress when I tell people this is that I don't view them as quote unquote lotto tickets. Some people say, you know what, I'm just going to buy these options. They're way out of the money. And if they work, they work. If they don't, they don't, right? But to be honest, I find that I don't need to do that. I can actively trade these options and treat them like other contracts. I can plan my risk, right? I can target my reward, and I can trail stops on the upside, trail stops on the downside as they work in my favor, right? Like trim and trail. So the idea of quote unquote lotto tickets to me doesn't really always apply. I mean, there are some scenarios where I say, okay, I'm going to put the money at risk here. If it works, it works. If it doesn't, it doesn't. That's great, right? But a lot of times for me, that revolves around events where I know that there's a realistic chance that I can't control the stock because it could have a significant gap up or significant gap down, right? So there is more elements of like almost like a large gap or large gap up or large gap down. And I can't I might not be able to trade in and out of it with like stops during the session, right? Roku is a great example of kind of what I mean. All right, so Roku, you can see the stock really hasn't done a whole lot over the last month and a half, right? It's kind of hanging out in like the low teens, and I'm still kind of searching for direction. Although one of those names where it does get a lot of eyeballs, right? A lot of people are familiar with Roku. A lot of people watch Roku, even though it's not doing anything. It's probably a lot of people kind of just keeping an eye on it in case it does do something, right? Now, during the session, there started to be some unusual option activity on options way out of the money. So July 240s, all right? So July expiration 240s. So that would essentially be the stock doubling from where it was basically a month from now, all right? So significantly out of the money, right? Now, yes, those are substantially out of the money and probably need a huge event to get them in the money, right? To get it above 240, you're going to need a significant event. But that doesn't mean you can't potentially make money on them, right? With the stock not even getting anywhere near that, right? So if I go to like a shorter term pattern here, you can see that during the day, right, the stock has been slowly moving, then all of a sudden it started to pick up and start to run on higher volume, right? Now, if I went to options, you can see that these way out of the money contracts, so let me add this. So these way out of the money contracts started with unusual volume, and then they kept getting more and more volume, and the options went from, you can see here, so these are 120 points out of the money. They went from a low of 10 cents during the day to a high of, or where they're currently at, or 65 cents, right? So that stock is still over 120 points out of the money, right? And it would need a significant move to get even anywhere near the vicinity of 240 from like a technical perspective. But that doesn't mean you can't make money on the options during the day, just as day trades, right? So if you had bought lower, right? If you had bought in the teens, if you bought in the 20s, even in like the 30s, this is still a great intraday trade, right? So you don't have to view it as a lotto ticket. Like, you can view this as a normal trade. Like, you can take money off, you can scale back risk, you can trail a stop, right? Because just because it's far out of the money doesn't mean you need to approach it from that perspective. Like, you can approach it just as like a normal other option trade, saying that it's moved in my favor, right? I want to scale back risk. In this case, you can't roll up because that's the highest offered contract, but they may open higher up contracts or further out of the money, and then you could either turn it to a spread, maybe roll up to a different contract, right? But the main thing I really want to stress is just because options are out of the money and you may have only paid like small net debit for them, that doesn't mean you have to treat it as an all or nothing. Like, if it moves in your favor, right, you can scale back risk, you can roll. There's plenty of things you can do to manage it, and it doesn't have to be that quote unquote lotto. All right. So if you like this video and you're looking for more option trade ideas or more earning trade ideas or catalyst trade ideas, we got some bio events coming up, please follow up with the link in the description of the video for more information on options and play. All right. Have a fantastic night. Stay well, and I will talk to you all tomorrow.